our segment for today, we're going to be talking about the 7 deadly stocks. This is 7 stocks you absolutely should not own for all intents and purposes, and this is reinforced by Wall Street. This is not just based on our thinking, where we have nice quotes from Wall Street to reinforce all of these opinions. And yeah, there's a lot of stocks that analysts have been shouting about for some years now that people shouldn't be buying, and lots of people still do, especially the last one on this list I found to be incredibly surprising. So yeah, excited to get into it.
I love it. So these are the stocks analysts consistently say to avoid: missed earnings, weak growth, the whole list. So let's get into it.
Let's do it.
Macy's number 1. Throwback to Macy's. It reminds me of JCPenney. That's what I think of right away. But we got Macy's as number 1, Gus.
Yeah, Macy's number 1. It's, Macy's has been struggling. They got macro struggles adapting to the world of e-commerce. First bullet point, and that's a big one. You see, companies that have successfully adapted, like a Walmart. They have successfully adapted to the world of e-commerce. You have to be able to hang with Amazon. Basically, is the way that the world works now. If you can't hang with Amazon, you're going to fall by the wayside. In the micro, store closures, declining revenue. They have fewer and fewer stores every year these days. They also, and this was hilarious and didn't get talked about enough, I don't think. In November 2024, they noticed just suddenly that $132 million to $154 million in delivery expenses had been intentionally concealed. It was one employee who acted alone, and they weren't able to find any evidence of personal or financial gain for that employee. And so Macy's just threw their hands in the air and said, we don't know why he was doing this. And I think that man was a scapegoat, because there's no way $150 million goes unreported. And it's just one individual acting alone who gained nothing from it. So found that to be quite odd. Last point, when's the last time you went to Macy's? You yourself. I don't know the last time I walked into Macy's. That's a great question.
Yeah.
Like, it's been a while. It used to be a thing when I was a kid, back to school shopping. Like, Macy's is one of the places you would get some clothes. But yeah, I don't know the last time I went to Macy's.
It's been a while. I know those brick and mortar stores have been struggling for a while. I went to a JCPenney's. I know slightly off of Macy's, but I think it's its cousin. I went to a JCPenney, I think maybe 4. Yeah, Kohl's is definitely in there with Sears, but Sears went bye-bye. But JCPenney, I remember going in there. It was just completely dead. I do remember for my homecoming dance in high school, I remember picking up my stuff from JCPenney's. Like, I remember JCPenney's being all reliable, getting some dress pants, some nice shoes, a dress button-up shirt, whatever it is. But it's in the same boat as Macy's. You mentioned Amazon and Walmart. Do you think those? I know we're not talking about those right now, but quickly, Macy's struggled to adapt to the e-commerce space, right? And it's almost like Walmart's doing a great job of adapting to the e-commerce space. It almost feels like those companies are now at the point where they're almost too big to fail. It's like, as long as they're adapting with the times, they're going to see success. But it was funny when you mentioned that. That's what I thought of. But been a while since we've been to Macy's, to answer your first question, Gus.
Yeah, I mean, and that's the thing, is it's all just about staying with the times. Everybody is too big to fail until the times catch up to them. AOL was too big to fail at one point, but you got to be able to think quick on your feet. Macy's hasn't done a great job of it. Next slide here, we have, this is TD Cowen has had this thing rated at market perform. Also, sidebar, we have got to standardize the rating system. Analyst companies of the world, if you can hear me, analyst companies of the world, fix this system. We need one consistent set of ratings, because I'm tired of market perform and neutral and market average. You guys are just pulling things out to say the same thing. Anyway, TD Cowen has had this rated as market perform for the last year, lowered their price target multiple times in that time frame. They have concerns about the broader retail environment, which, as you mentioned, Errol, retail stores are struggling bad right now and have been for some time, ever since the advent of Amazon, full circle. JP Morgan downgraded it to neutral last month. They lowered the price target by over 25% last month, cited highly mixed performance in 2024. I think that's a kind way to say they kind of sucked in 2024. And Citi also downgraded and slashed their price target by more than 25% last month. They cited decelerating comparable sales, issues with navigating external uncertainties. And by navigating external uncertainties, they mean getting on the internet. And decelerating comparable sales, they're slowing down. This is a bad look for Macy's. This is a stock that I've been bearish on for I don't know how long. They just keep on closing these things. And as we're going to get into with a lot of these companies, there's just better things you could own. There's just better things that you could own in this exact same retail, even if you want to get into the retail clothing space specifically. So Macy's is our first one.
Yeah. All right, second one, we have Kraft Heinz, a little bit different, kind of in the same ballpark as those companies you kind of known of kind of growing up that you grew up with. This has a market cap of 36.3 billion. Year-to-date performance really not as bad in comparison to the rest of the options that we have here, Gus, but a negative 2.3% on the year. Things could be worse. Again, Tesla had their advantage. They had the run up before the massive downside, so they had a little bit of a head start. But Kraft down a couple percent on the year, bogged down by poor retail momentum in the U.S. Consistently missed growth targets in 2024. After looking at some of these other underlying, it's funny how many stocks flew under the radar that was really struggling in 2024, but just the market saturation increasing for all products. I went to Publix the other day and I got a ketchup, and it was Kraft Heinz, and it was like a habanero ketchup, but it was on sale. So I was like, okay. I went here last week, it wasn't on sale. And then I think I had seen it at Walmart and it was on sale at Walmart. So I was like, okay, maybe they're struggling a little bit, especially when they're getting all crafty with the sauces that they have. Like they have a jalapeno ketchup one, a habanero one, a pickle ketchup one. I'm like, okay, they're getting creative. They're straying off from what they usually do. Maybe they're taking a little bit of a hit.
They keep trying to do these horrible collabs with like Lay's potato chips as well. They roll out ranch and ketchup flavored potato chips. And it's like,
I see the vision.
I see the vision, but like, I see the vision. We could do better. I feel like. Anyway, sorry, go on.
Yeah. No, completely. But we got some downgrades. We got Goldman Sachs rated a sell for over a year, lowered price targets in October in 2024, again 2024. Piper Sandler, overweight ratings for 6 months, needs for visibility, confidence, and better U.S. retail momentum. So that's slow and just U.S. retail momentum. And then we got Mizzou. I hope I don't pronounce that wrong, but Mizzou downgraded in February on growth concerns, cited weak historical execution off trend portfolio, which is challenged for growth. So it's just really looking like we've seen these slowdowns back in 2024, and maybe we see that continue into 2025, especially for Kraft Heinz. Never traded I don't have that in my portfolio either. Have you traded this underlying, Gus?
No, actually learned this was, well, I shouldn't say learned this was a public company, but it was brought to my attention once again that this is a public company for the first time as I was doing research for this project. I didn't know. All right,
number 3.
People might not like this one. On Semiconductor, market cap 19.83 billion. Really poor YTD performance, and also I should add that these slides were made yesterday, so that's before all of the craziness that happened today. These numbers would all be worse. But year-to-date performance, they're down 35.92%. On Semi is, and I'm not going to say semiconductors are a bubble, but it is a slightly oversaturated space right now. And this is just one of those companies that would be easy to see getting squeezed out by the bigger players in this market. They have declining demand in key markets, their two key markets being automotive and industrial. Their manufacturing is done in China. The tariffs that just came out are going to hurt. And they're consistently losing market share in the semiconductor space, as I alluded to there at the beginning. The TSMs of the world are going to squeeze out these smaller companies like On Semi more than likely, and that's what's been happening, and that's why they have the declining demand in key markets, is because automakers are choosing to switch to larger companies that can manufacture these things quicker. We can jump over to some analyst stuff here. Yeah, we have CFRA sell rating. Good rating, by the way. Love this rating system. Sell. Good. Anyway, sell rating since July 2024. They cite their poor price to earnings ratio, concerns about competition for silicon carbide, which is what they use to make these things. It was news to me. Perhaps it's news to you. I'm not an engineer. Morgan Stanley, underweight rating, which is bad, by the way. You feel like underweight means like it should be bought up more? Wrong. Underweight is bad. Rating since July 2024. Concerns with their ability to compete in the semiconductor space, essentially saying the same thing a different way. There is increasing competition, increasing market saturation. And Truist Securities, who I am brand aware of because of their sponsorship of the Atlanta Braves baseball stadium. So good on you, Truist. Downgraded from buy to hold in February. They also slashed their price target by almost 30%. They cited deteriorating demand trends in the automotive market, so they're getting more specific. On Semi isn't doing as well with automotive anymore, but really, market-wide, On Semiconductor is having problems. They're getting squeezed out. This market is becoming more saturated as more and more people. It's a gold rush for semiconductors right now. There are simply better players, and once again, if you want to own a semiconductor stock, there are just better ones to own. So On Semi definitely makes the list to avoid in 2025 for me.
I know On Semi is down 35, almost 36% on the year. Granted, they had an insane year or an insane run in 2024, all these semiconductor stocks. So adding a little bit of context, it's not as bad as it looks. They started pulling back, or the bubble may have popped, if you will, if you wanted to consider that a bubble, as the year started. So we'll see how these semiconductors perform. But we got good old GoPro. GoPro market cap of $102 million year-to-date performance, getting absolute slaughtered right now, almost negative 40% on the year. It's failed to diversify products, market saturation constantly increasing, consistently declining demand, and missed multiple sales targets in 2024. 2024 seems to be a very common theme of across all these other underlying. So I know with GoPro, the consistently declining demand, number one, it sounds like consumer sentiment has been down overall. And then on top of that, there's so many more products like a GoPro that's more cost efficient. And I wonder if they're taking a hit in that area too. GoPro has like the name of the like official GoPro. People use these type of cameras for these type of things. And there's so many, I don't want to call them knockoffs, but there's so many other rebrands of things like GoPro for half the price, and maybe they're getting the same output from them. But it's not too much of a shocker to see GoPro on this. But I think seeing it down 40% year to date is a bit of a surprise.
Yeah, and GoPro, it's you make a good point. I mean, it's almost like a Kleenex or Velcro situation where GoPro has become the catch-all term for these action cameras, and so we don't really realize that the market saturation is increasing because you assume that it's a GoPro whenever you see these videos, but it is, and yeah, they're getting squeezed out.
And again, it reminds me of like Band-Aid for a second. Like Band-Aid is the brand itself, and there's so many different brands of Band-Aid, and they have the name Band-Aid. Exactly. So that's kind of what it reminds me of when you bring that up again. Now we got Morgan Stanley, equal weight and a sell. I love the buy rate, or I love the buy and sell ratings, like you were mentioning. Very straightforward and simple way put. But sell ratings for the last 18 months cite concerns about uncertain outlook. Oppenheimer underperformed ratings for the last 2 years. Skepticism about GoPro's ability to diversify its product lineup and return to growth. As for GoPro, what are their other popular products? Do you have any idea of that? I'm sure they have
accessories.
Like I mean, straps, accessories.
Yeah, you have to. It is like a whole thing. You got to buy like the kit for whatever you're going to be using the GoPro for, and you got to get a waterproof case if you're going to go in the water and all that good stuff. But I don't know that they have another actual high value product.
Okay, I'm just curious. I just wonder, like, for example, have you seen those motorcycle videos where they're recording themselves off like a 360 camera that sticks out with an arm?
Yeah.
Like I was also curious. I wonder if they create anything like that either. But outside of accessories, I don't really know what else main products, like you mentioned, they're selling. But either way, Wedbush Securities has a neutral outlook, and a sell ratings for over a year concerned no sales growth targets will be hit in 2025. That's a pretty bold statement. Concerned no sales growth targets will be hit in 2025. So again, very common thing across 2024 this year. It seems like a lot of these underlyings might be taking a hit, but GoPro is not spared in the destruction of some of these underlyings. But we got GoPro for the third one, Gus.
Yeah, Pfizer. Pfizer's our next one. People may be surprised to see this one on the list, but I'm coming with backing. Pfizer, again, is just another one of these where if you want a pharma stock, I can name 3 pharma stocks that would be better to buy right now. I can certainly name 2, Novo Nordisk and Eli Lilly. Pfizer is just sort of in a weird place in the market right now. They were really thriving on their COVID-19 products. Obviously, that was when the name Pfizer kind of became a household name, was when they were rolling out the vaccine. I think that they were first to market with the vaccine, if I'm not mistaken. There's increasing competition in the pharmaceutical industry, and most critically, they're very late to the market for weight loss drugs. They do not have a weight loss drug in the market right now, and I've been making this comparison for a while, but weight loss drugs are the AI of pharmaceuticals. If you're a tech company, you can say AI and you will get a price bump, and if you are a pharmaceutical company, you can say GLP-1 or semaglutide, I don't know how to pronounce it, and you will get a price bump. And Pfizer has not done a good job of that. Now, to their credit, they do have a weight loss drug currently under development. It's going to be an oral one, so no injections required, and they're hopeful to have it released by the end of this year. But that's a ways away, and that's a lot of time for these other companies, the Wegovy's and Ozempics of the world, to continue diversifying diversifying their product line and work on getting their supply chain in place while Pfizer is still working on developing the product in the first place. Additionally, Trump administration, RFK, has made lots and lots of anti-big pharma claims, and it seems that he's really going to try to crack down on big pharma, whether that means more taxes, less subsidies for research, whatever it may be. It's probably going to be a bad presidential administration as far as pharma goes. Again, ratings here, pretty similar to what we've been saying. TD Cowen, market perform. UBS Group, neutral. Citi lowered their price target last month. Cautious outlook in 2025. Across the table, analysts are not high on Pfizer, and for good reason. I think that they could be a company that falls by the wayside in this space race in pharmaceuticals right now. So Pfizer's our fourth one.
Yep. I think it's interesting how they're marketing as like you can take it orally now. I think people getting stick with something like needles, if you can find an alternative to that, I think that's a kind of a very unique angle that they're coming at it with. Yeah. Absolutely. Yeah, exactly. Definitely. Next, we have Lyft. I can't say this is so much of a surprise, and we're going to go over a bullet point that I believe we've touched on over the last couple months, but the market capitalization of Lyft is $5 billion. Year-to-date performance down negative 13% on the year. It is a cheaper underlying, so down 13% is a hefty hit that Lyft is taking year-to-date. But Bank of America downgraded Lyft 2 levels from buy to underperform. Analysts cited Waymo's expanding presence as a direct threat to Lyft's long-term viability. I thought that was really interesting. I know Uber is doing a little bit more when it comes down to the robo-taxis. I'm using that term loosely because I know robo-taxis might go more with a specific industry that might be using them, but growth in autonomous ride-hailing is outpacing Lyft's traditional model. I'm curious to see if they're going to make a mistake of adapting and adjusting and transitioning in a timely manner, or if Lyft is going to get hit when it comes to those things in the industry. Q1 guidance was weak, and revenue growth is slowly dramatically. Despite being a household name, Lyft is losing market share to Uber, not a surprise, and struggling with profitability. Not a surprise again. I was bringing up to Dr. Jim again a couple months ago. I was kind of surprised about how long Lyft was able to stay in the game, especially with Uber taking up so much of the market share. But then again, I had to remind myself, some companies just want a piece of the pie. You don't really got to be the big dog, the number one in that space to really see any type of success. But I've just been surprised with the domination of Uber kind of turning into one of those names we were just talking about, right? It's like you can get a Lyft, like we call a car picking us up an Uber just naturally, and someone might be like, oh, I actually use Lyft, but we use that term interchangeably again. But Bank of America Securities downgraded Lyft from a buy to underperform, reducing the price target from $17.50 to $10.50, almost chopping it in half. The downgrade was due to concerns over Lyft's slow progress in autonomous vehicle technology and increasing competition from companies like Waymo and Tesla. I think if you have Tesla in your back pocket when it comes down to electric vehicles, number one, and self-driving, and if you're a service like Uber or Lyft and you can have Tesla in your back pocket, they might push you over the edge to be leading in that space too. So I think Lyft is definitely at a disadvantage because they're not going to have any of those partnerships on lock. So we'll see how this space develops overall. But Lyft is taking a beating.
Yeah, I'll say not as a share, but as a company, I am a Lyft user. I use Lyft pretty much exclusively. I've come to find that it is just cheaper than Uber pretty much everywhere I go for the same experience. So as an economist, if I find a cheaper, perfect substitute, I'm going to use it. But I'm not surprised to hear these things. And the brand recognition for Lyft is just so bad, as you mentioned. I noticed walking out of the airport the other day in some city, I've been doing a lot of traveling recently, that the lines that I was following to go to my Lyft all just say Uber pickup. Big Uber logo, big stickers on the floor, Uber pickup, and no one ever is using Lyft in that sort of context, even though that's what I was going to get in. So that's a problem facing them as well, I think.
I mean, and you know what's so funny? If we were to think about right before we get into our last one, I know we got a couple minutes left, but you know what is so funny? Uber, before Uber came about, like Uber doesn't sound like an action word or like a Uber, Lyft, if we're speaking 10, 15 years ago, sounds like, right? It's a little bit more on brand for what type of service
people have been saying, I'm going to go catch my Lyft forever. My Lyft is here. Yeah.
Right.
And I agree. It should be better.
Right. But anyways, Uber definitely dominating in the long run. But the last one we got here is Nike. Gus, it's been beaten down year to date, but we definitely got some downgrades on it. But we got Nike. What is this one?
Nike. These tariffs, you could obviously go on and on about tariffs on a day like today, but Nike is getting hit bad by the Vietnam tariffs. Actually, I didn't realize that Nike did as much production in Vietnam as they do, but that is what's hurting them the most. 30% of manufacturing based in China as well, under heavier tariff pressure, as I mentioned with On Semi. If you're centered in China right now, you're not doing so well in the market today, I assure you that. Slower demand growth in North America and Europe, I would assume that is likely due to increasing substitutes entering the market. I'll float this one. All of these girls wearing Hakas and On Clouds right now were wearing Air Forces 5 years ago, and they're not anymore, which is one very niche example. But there are just more substitutes entering the market, and Nike doesn't have the appeal that they once did, maybe 10, 20 years ago, as being the clear best option if you're looking for shoes or clothes or whatever. And they're also pivoting to DTC, which is not offsetting wholesaler weakness. That's always going to create problems for you. I'm personally a DTC bull in general. Nike has not done a particularly great job with this transition. But Nike struggling. 32 Wall Street analysts. Oh, you got the consensus. Let's go, Errol. Based 32 Wall Street analysts over the last 12 months. Moderate buy, 14 hold, 18 buy. And I would assume that people may be pivoting on that stance a little bit more like today, now, after these new things have come out. I would assume that we will see some buys switch to holds. So Nike, weak one, don't want it in your portfolio 2025 either.
Yeah, no, we're coming to a close. I know I was thinking about it the other day. I had a conversation around, things like Lulu, Alo, like the aesthetics with their merchandise being posted on social media. And it really seems like they're grabbing a chokehold in the fitness industry. And I remember Nike Pros were so popular. Like those back in the day, 5 to 10 years ago, were like the A1 fitness gear that you can find. And now I see a lot of consumers choosing branding that is a little bit more simplistic, like an Aloe, right? The fonts and the branding isn't as aggressive on some of the fitness products.
All of them.
Right, absolutely. They're clean. Yeah, clean and simple. And it sounds like, Nike Pros and the Nike, like all of those fitness.
Nike Elite socks, bro.
The fitness
Nike Elite socks in 2014,
don't get me with Sperry's? With the Sperry's.
Nike, the double layer Nike Elite socks, the $23 pair with the Sperry's. Oh, yeah, that was heat. That was heat in 2014.
With the cargo shorts?
Yeah, bro. Pop some Chief Keef on the radio and throw on the Nike Elites, bro.
You're chilling. You're chilling, bro. Driving down memory lane right now. But no, but we'll see how Nike performs for the rest of the year. Probably going to still take a hit. I know we got a lot of uncertainty still with